Welcome to Go Big or Go Home Forex Zambia. Your host, Thomas Delalu. Today's video, it is for education purposes. So we want to learn about the market cycles or how the market turns. The market, it moves in M and W formation, from a bullish market to a bearish market, and from a bearish market to a bullish market. So we are going to learn how the market turns in M and in the W formation. So let's go to our MetaTrader where we see the market moving. This technique is going to show you a different approach to the market. A lot of people, they see the market moves randomly, or they see the market that they cannot make easy money with it. But this simple technique which we are going to use, we are going to see how the market turns, or how we are going to milk the market without having much pressure. So the tool which we are going to use to view the market in this way, we are going to use the Fibonacci retracement. So this tool, the Fibonacci retracement, I'll give you an example. This is AUD USD 1 hour chart. You can use it in bigger time frames or in smaller time frames, because price is a fractal. So as we have seen this rally which was going on here, how are we going to be able to make money in this move? This move which moves up without being stopped out, or without having any worry that the price is going to continue to fall. So I'm going to separate, giving you an example. Let's assume that price is here. Price is here. That's where price is. So how are we going to benefit from this move, this intended move? This is how you do it. You're going to get your Fibonacci retracement. You're going to swing it from low to high, to the highest point, this highest peak. When you move it to the highest peak like this, from the low to the high, you wait for price to break the low. If you want to buy, you wait for price to break the low, it goes down. Sometimes price moves up to 160, 1.618, but in this case price just reversed after breaking the 100 level. So when it breaks the 100 level like this, get your square, you color in between 50 and 60 level, this level here, you color it. When price returns back, you buy. You buy here. When it enters between 50 and 60, you buy. It swings. Sometimes it fluctuates, sometimes just booms up. But in this case, it swinged. When it entered this, put your stop loss below the previous low. So when you put your stop loss below, you're going to have, like this one had 61 pips as a stop. So when you buy, make a 1 to 2 risk reward. You hold. It is going to move like this, you see. So this is how you catch a buy turn. A buy turn after the market makers have trapped people. It is a trapping strategy. When they trap people like this, they trap from low to high, then they move from high to low, they break it, then they reverse inside the between 50 and 60. It means that they have trapped some sellers down here, so they are going to push price up. So you gonna enter. When it enters this level, you buy, then you go with it. Let's look at another example of a sell. Here is a rally. Here is a rally of price. Let's assume that price is here. Assume that price is here. Assume that price is on the blue. So how are we going to benefit from this falling move? This is how you do it. Get your Fibonacci, you swing it from high to low. When you swing it from high to low, price will break your previous high. When it breaks your previous high like this, When it returns in between the 50 and the 60 level, this level here, you sell. When it enters this level, you sell, put your stop above. This is about 53 pips. So it fall down up to, let's see how much it went, up to 94 pips. So you have a clean sale without price returning back, without being stopped out. So this is how the market turns. It first, your setup has to be based on a high. It swings low, then from low it goes up. So it moves like this. It moves in this wave. They will go up, so they should make sure they break your high. They can hit the 1618 or they break. When they break like this, then it enters this level here. You take a trade, you sell, your stop above, then price goes, it continues down. So this is the circle. This is the S formation. We call it the inverted S formation. This one which we have seen here, it moves like this in an S format. An S format. So in M or W, so like this, it is an inverted S. So we sell on the 50 level when it breaks. So like for this one, it's a buy. After it goes down on the 50 level, we buy. It means after price has trapped sellers or buyers, that's when we're going to take a trade. So as we have seen this example, let me go back again. Price, what did it do? What did price do? Price first make the high, moved like this, then it went down, it broke this one. When it breaks this one, it returns in this level. When it returns in this level, you buy, it goes without freely. So this is how the professionals enter. After the amateurs, they have been stopped out or they have been trapped, then us the professionals, we are going to enter. So this is the time when we are going to enter the market. So your host, I was Thomas Delalu, teaching about the market cycles and how the market moves in M and W formation. After the market makers, they have trapped the buyers and the sellers, we're gonna enter after they have finished the manipulation part. That's when we're going to enter. Don't worry about it, they are going to move in that direction as long as the circle has been complete. The S formation, the inverted S formation, which I've shown you in the pictures, once it is complete, they are going to move in one direction. Thank you so much for watching.